What's up, everybody? We're going to be getting started here in just a couple minutes. We got some great things to talk about today. Market's moving around. I hope it didn't chop you out. I hope you were prepared. Are you prepared? Were you prepared? Did you get liquidated on any trades? Or did you have a good risk management strategy? Let me know what you're doing. Let me know how you're feeling. We're going to be getting going here in just a couple minutes. Man, I'm feeling good. The start of the year, productive, keeping my discipline, doing what I need to, seeing this market move. Excited to be here chatting with you. We got a lot of charts we're going to be showing. We're going to be talking about the washout to the downside. Is it done? Is it going to continue moving down? We see a little retrace back to the upside. What does it mean? Let me know what you think. Comment down below or comment in the live chat if you're watching live. Let me know what you're feeling about this move. Do you feel like we're trapping some people as it moves back up only for it to move back down here in a short bit? Or do you think that was it and we're about to continue up? Let me know what you're thinking. Let me know what you're feeling. Shout out Tommy Luck. Shout out Jason Rohde. What's up, everybody? We're going to get this going. Shout out to all the members that are here. Crimson Caravan, Atropine, Sawtooth Hiker, Donato Cabrera, and so many other people. Who else we got in here? Brendan Butchery, Alexandra G, my boy Justin Eubanks in the house, Ruzba Benafti. We got some stuff to talk about, so let's get it, everybody. All you wonderful people that are here early pre-stream, when everybody starts rolling in here in about 5 minutes, everybody welcome them. Get positive in the comments. Welcome everybody to the family. Let's grow this community. Let's hit 10,000 by the end of this month. Big love to each and every one of you. Can't wait to get this going. Welcome to being a BitLab Tech, maybe a Band-Aid. Shout out to you. I see you. Shout out to all the members. I see some people's membership badges next to them with the beakers. Your beakers are filling up. That means you've been around for a while. Shout out. Rodney Cowden, what's up? No way this is going to 36 in the next few days. All right, well, let's talk about it. I could see that happening. In fact, I may even agree with you. Where's everybody else that's here? Where do you see the price going here in the next week or two? Let me know. Do you think it's going up from here? Do you think that was it? Or do you think we're only trapping people and we're going to move back down? Everybody, let me know what you're doing. Where are you tuned in from? And how long you've been a member of this channel? I mean, just a viewer of the channel. Let me know. And we're about to get this going. What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy daily stream. My name is Kellam. Welcome to the show. Welcome to the family, because this isn't a show. This is a community, and it's all about each and every one of you. Did you wake up with a little bit of a fright today when you saw those big red candles to the downside? Did it scare you? Did it shock you? How did you feel? Ask yourself right now, how did you feel when you saw that? If you were super excited, that means you either had a short prepared, you're in a short, or you have some targets to the downside that you're already prepared for taking advantage of. If you are scared or you don't know what to do, that's okay. It's okay to admit how you're feeling when you see the charts. In fact, if you're, I'm going to say this, if you're unable to recognize how you're feeling when charts move and have a big move like they did earlier today, when you see that giant candle to the downside and in a moment's notice, if it scares you, check yourself on that. Ask yourself, what's my strategy in this sort of situation? And realize that if you're actually scared in that moment, that means that you did not plan or account for the possibility of the market moving in that direction. If you can't recognize your emotions when you're trading, then you're not going to be able to recognize profits. Know that, okay? Now, markets moved, but what it really means when we see the markets move like they just did and we had a huge drop to the downside, we'll also see this when we get huge pumps to the upside. If you feel worried, scared, frightened, hopeful, fearful, greedful, any of these emotions and you're unable to recognize it, then you're going to be unable to recognize profits because that means that you did not already have a plan that accounted for that possibility. So our job is to make sure here at BitLab, to make sure that you have the tools, to make sure that you have the resources, and make sure that you have a plan regardless of what happens in the charts so that you can take advantage of these movements and grow the opportunity of your portfolio into the future, meaning that you're in profit. And you can only do that if you have a plan, and you can only have a plan if you recognize how to read these charts and how to set up for all eventualities and what's going on in this market. So with that being said, everybody, we got 208 people in the room. Every one of you right now, hit that like button, look below the video. If it doesn't say subscribed, what are you doing? Join us in this community, positive, empowering. Just this is what we do here. All right. Now, everybody, I want everybody that's in the room right now, let us know where you're tuned in from, what city, what state, what country. And is this your first time or are you an OG? Let us know. Let's tie this community together. Without any further ado, I think it's time to talk about what's going on in the market, what's going on with the price. Boom. What is going on with the price? Man, that looks so scary, especially if you're one of those degens. And I'm a degen sometimes, where we zoom in like this and all we see, for instance, let's put this on replay mode like this. Okay, and you see this and you're looking at the chart. Say you woke up this morning quite early if you're here in the US. Say you're up at 4 a.m. or maybe you woke up a little bit after this. And what you see is you see this play out and you see this, and you try to take longs and it just keeps falling. It just keeps falling. And you're like, what the hell am I doing? Why does it always go down when I go long? Why does it always go the opposite direction of the trade that I'm trying to take? If that's you, and that's okay, I want everybody to be honest right now. If you have ever had a period of time for more than a day, let's say a week or longer, where you felt like every time you take a trade, it goes in the opposite direction of where the trade you're trying to make, throw a 1 in chat right now. I want everybody to see this because everybody out there, even myself, has felt periods of time like that. And we have to ask ourselves, what is the reason what's wrong? What rules are we breaking of our strategy? Maybe we don't have a strategy, but what rules are we breaking that is giving us that failed trade consistently? Because it's not the market. Let me say this again right now. If you're taking trades and losing, every time you buy, it goes down. Every time you sell, it goes up. If the market is consistently going in the opposite direction of the trade you're taking, the market is not out to get you. It's not the market's fault. It's our own fault. Let's point the finger at ourselves and say, how the hell can I change this? What can I do to adjust my strategy so that I can take advantage of the market and not let the market take advantage of me? First things first, it's diligence, having time and education in the space, in the charts, in the analysis, understanding what our emotions are around all this. What is our strategy? What time period? What risk exposure? All these questions, if you're not asking them, then you don't deserve profits. And I think each and every one of you watching this right now deserves profits, and you deserve to succeed in this space. And we can only really live up to that eventuality. We can only live up to that reality if we are taking ourselves serious, if we're taking ourselves seriously, and if we're doing the things we need to do to make sure that we can ensure consistent profitability over time. It's our fault. So let's make this our fault to win as well, not just be losers in this space, because none of you are losers, but at times we can all take losing trades. In fact, if you are a trader, you're going to take losing trades. You have to be able to accept that. and ask, what can I do when I am taking losing trades? What can I do to win? And that's what BitLab Academy is all about. That's what this community is all about, to give you those tools so that you can dominate. So what are we doing with this? What do we do with this? What do we do with this? Well, first things first, let's go through a couple charts, and then we're going to break down exactly what we're seeing here. We got 234 people in the room and only 43 likes. Let's get this up to over 100 likes. Let's get this up. Let's get that engagement, because the more you guys engage with this, the more YouTube knows you like crypto content. So let's talk about this. Coming over here, if you haven't yet, make sure you're following the BitLab Academy Twitter page right here at Academy BitLab. Again, I only call these out because there's so many fake profiles out there, and I don't want any of you guys to get involved with any scams. And of course, head over to my page here at Kelly Kellam, Kelly Kellam. Now let's talk about what it is we want to talk about. First things first, okay. Everybody knows, if you don't know yet, maybe this is the first stream you're watching today, there's a report that went out from Matrixport that suggested that there was a likely good reason for the ETF denial or delay coming in this next week. And some people want to say, when they're looking at the chart, this drop is fully accounted for because of that. That report is what did it. Well, what if you didn't even look at the news? I know traders out there, one of my friends here in the cryptoverse and the Twitterverse, and in crypto, we've talked a lot. He's been on my podcast a lot. I've had him here on the show, Jesse Olson. He doesn't even really look at the news, and he kills it in these charts. So why do we need to find an excuse for why price did what it did outside of the charts? Now, we can utilize that information to help give us some context and help us color what the narrative might be in other traders' minds. Sure. But let's say you're not looking at the news whatsoever. If looking at this, I talked about this yesterday mid-afternoon, I think. I shared some tweets. Let's see where it's at. It's actually over here in the Discord. In the BitLab Discord at 2 o'clock yesterday, boom, 2:27 p.m. Eastern time. I shared this chart right here. I said head and shoulders suggesting a move down towards 44.5, target right at the weekly VWAP. Now, this didn't obviously account for that major move that we had to the downside, but this was showing not only do we have a head and shoulders here, but if we look at this in context, let's look at the broader scope of what we're seeing on this chart pattern. This is a 15-minute chart on Bitcoin, and we can see what is this structure right here. And I've talked about this before. Patterns repeat over and over in all assets. This structure to me looks so similar to what? You know it, say it. Let us know in the community chat. What we see here, looking at the 3-day chart, look at this. Look at this structure right here, boom. See this? Impulse up, retrace. Impulse up, which is smaller than this previous impulse, and then retrace. Smaller than this previous impulse here, retrace. Now, this is now stretched out sideways and doesn't even, the bullish narrative cannot even carry this higher. We're basically getting almost a triple top here. It's not, because we are getting higher highs, but we're seeing this roundingness. The rounding suggests an evaporation of the bullish narrative over time. Now, we still have some bullish narrative as this is coming up, but it's getting weaker and weaker, which means the bears are waking up from hibernation until ultimately, and yes, I've talked about this before a lot on this channel, but you got to get it through your heads and ask yourself when you're seeing patterns, have you seen something like this before? Because patterns is what gives you context in this market to understand the narrative of the bulls and the bears. If you cannot understand or forecast with some consistency what the narrative is in terms of the strength of the bullish narrative or the bearish narrative, then you're not going to be able to identify when those trends might reverse. And in this case, we see this rounding this. Now, this is, of course, all the way back in January 2021. So let's go ahead and remove all those lines. Let's look exactly at where we're at today on the price action. Let's get all the way over there. Now, let's get back down. Let's look at that 15-minute chart. And does that not look eerily similar? Impulse, smaller, a little bit more delayed. And then over here, now we get that lower low, lower high. So this was a signal before we even got the head and shoulders pattern. We see this. So not only do we have the rounding, but then once this drops down on this attempt back up, these attempts back up, we actually see a bearish reversal pattern. In this case, it's more of a continuation pattern because we broke down into the head and shoulders. Now we got the head and shoulders here. And then ultimately we did chop sideways for a bit, even flushed some more liquidity out as this did rise again to the upside. And then ultimately we got that capitulation down, which I consider as an open interest flush to the downside. Open interest, what is it? It's how many people have futures and derivative contracts out there. How many people are betting with leveraged money, borrowed money. They're adding an exponential factor, an X factor to what they are trading, which has impact on the market. And when you have a lot of people going long or a lot of people going short, meaning the majority of, and it grows, then what you start getting is high funding rates. And in fact, yesterday we had the highest funding rate on record for Bitcoin. Record highs. And not only that, it was positive, which means the positive funding rate means there's more people going long than short. So the longs, that fee that you're paying when you're taking a leverage long or a margin long or some sort of futures long, that fee that you're paying pays the people to go short. This is one of the things that helps keep balance in the market. And it also is a signal to you as a trader where there's a little bit of a, what's the word I'm looking for? Divergence or some disproportionate interest in the market that can help identify that something may be coming. In fact, if we come over here and look at this, this is the liquidation heat map on coinglass.com, free website. You can see here we had $125 million in Bitcoin longs liquidated, 100 million other, or almost 100 million Ethereum. And we see this whole chart. Everybody was leveraged long and the majority of liquidations as the price moved down. So this also, if you think about it, it gives you some accountability for why this moved so fast. This is one of the reasons why we want to pay attention to leveraged positions, what that funding rate is, and where the open interest is at. And we have a whole section in the BitLab Academy courses here. I think it's in trading fundamentals. I think it's in this section. There's 18 or 20 different very important lessons in here in the BitLab Academy at bitlabacademy.com, where we talk about these market trade metrics as I designate them. And what this means is when we get a lot of people leveraged long, when the price action does move past a certain threshold, a threshold in which people have to close the longs. And if you close the long, what do you have to do? You have to sell. So what happens is when price gets pushed past this certain threshold, it starts a domino effect, which essentially you see these cascading, very quick price action movements to the downside. So by understanding what's going on with, okay, the liquidation is showing what happened as a result. But if we come up here and we can, actually, I have some charts on it up here. Where's it at? Boom. What I wanted to say about this before we go to those charts, this matrix report that everybody says this is a reason of a price drop. The price action charts already suggested that some sort of move to the downside was coming. Now, did the price action chart itself suggest that we're going to have cascading liquidations to the downside? Not necessarily, but the chart itself showed a move to the downside was coming. Now, you pair your technical analysis of what the candles show on the chart, and you add in with that all the different ingredients to make your delicious meal of profits. You add in the ingredients of looking at other technical data like open interest, like what the long to short ratios are, what's going on in the market, where the health of the market is in that respect. And that gives you the accountability for, yes, price actions to come down. And if it does come down because of this other data, it likely will move down quickly. Now, it also, when we talk about this specific news report, it's interesting here that, you know, that Yihan Wu, founder of the ASIC manufacturer Bitmain, remember Bitmain is one of the it may be the largest ASIC manufacturer, which is Bitcoin mining's hardware. Infamous proponent of big blocks during Bitcoin's block size wars, is also the co-founder of Matrixport, the firm that put out today's SEC rejection FUD. Now, if we come over here and we come to Kellam Franzen, I just want you to notice this. I think he's the one that retweeted this. Let me see. Where is it at? You're right here. I want to be clear. I'm actually happy this happened. Short term, blah, blah, blah. Now look at this. Matrix report. Same company. January 1st, 2024. ETF approval is imminent. This is what they said. 2 days ago, January 2nd, yesterday, ETF rejections are coming. So obviously something's going on. It feels more to me like they're trying to shape the speculative narrative about what's going on and what is coming, what may not be coming, so they can really take advantage of it. Now, remember, these people that are actively involved with large businesses in this market, like miners or smart money out there, whales, they know how to move these markets. Do you understand that? All of us are retail. We are going to get caught in the traps if we don't have a strategy. These big money players, these market makers, the smart money, whales, mining institutions out there, they know what's coming, in that we have so much incredible fundamental news and events and structures that suggest an incredible 2024 is coming for the bulls in 2024, 2025. We've talked about all that here on BitLab Academy, from institutions on the horizon, the FASB rules changing, this Bitcoin, 11 to 14 Bitcoin spot ETFs, near imminent approval. And not only that, we're at that turning point that's coming up very closely on the S-curve of adoption, where we're going to hit that 10% adoption threshold, which we're going to see an explosive, I'm talking explosive exponential gain in adoption, meaning number of people that are utilizing or getting involved with Bitcoin and crypto, which is only going to exponentially increase demand. What happens when you have an exponential increase in demand? You see an in-kind exponential increase in the price of the value of that asset. And not only that, we have the halving coming up, which cuts the new supply issue daily in half. Smart money knows this. So why would they not take advantage of seeing open interest at all-time highs and fees? And, we're having incredible data suggesting things were overheated. We're still pre-halving. We're still pre-approval on spot ETFs. So why would they not nudge the market in a direction to where they can likely instigate a cascading drop like we just saw and take advantage of that to load up on more Bitcoin? Now, does that mean price can't go down low? Does that mean price can't go a bit lower from here? I think, in fact, that it probably will. We still have the CME futures gap directly below where we're at right now at $39,600. But the point being is, take advantage of all the data that these big money players are. And if you're not going to do that, it's okay. Be patient, have a strategy in place, and know what your goals are in this market. And if the price does drop and you just bought, then we know what's coming also. We look at the charts. We look at the graphs. We look at everything that's suggesting bulls are inbound. Extreme bulls are inbound. So we can take advantage of lower prices when they come and not be so worried about it. Not be so, oh, I'm so frustrated. Price dropped and I just bought. No, screw that. Let go of that ego. The price dropped. I get to have an opportunity to buy lower Bitcoin. That's what we want to do. So when we're looking at this and we come back to the charts, 230 people in the room, every one of you needs to be hitting that like button right now. If you're excited for what's coming in 2024, regardless or not, if you're fully prepared, we can continue to prepare ourselves every day. And in fact, that's what we're going to do the rest of our life. You never finish preparing. So hit that like button if you're ready for this year to really take off. Let me see. We got DJ in the like button for DJ Kelly, says maybe a Band-Aid. Shout out to you. Shout out to all the members in the house. If you're a member, drop in some emojis, what you're feeling, what you're doing. Are you buying? Are you selling? Are you buying that dip? Are you waiting for lower prices? Let me know what you're doing. Coming over here. All right, now let's continue on with what we're talking about here. What was I wanting to talk about here? We're coming to this in a second. Right here. So 1.5 billion in open interest wiped out in 3 hours. In fact, I was just on a Twitter Spaces a little bit ago with Scott Melker, the Wolf of All Streets, and a Crypto Banter, Crypto Man Ran. And, Crypto Banter made a good point. We basically flushed out the open interest from about 15 billion down to 9 billion. So in fact, this actually went down a bit lower. But the interesting thing about that is there's still plenty of room to go down, but the weaker hands got flushed out first. It's going to be harder to drop it further from here. So it may not even go further down, but there's a possibility, especially considering historical trends on Bitcoin, in that we've always seen at least one or more 40% drops before the halving. And in this case, we see, I truly think this currently, this is a healthy flush, meaning we're clearing out that open interest. Yes, some people lost money here, but the people that lost money had a flaw in their strategy. And if it's you, I'm sorry for you, but let's grow. Let's change what we're doing so we don't become a victim of market movements. We become a benefactor of them. That's the goal here. In this case, we see, I said it's also a reminder to not be a person that gets flushed, meaning liquidated or forced closed below your entry. Leverage is a tool. A lot of people are out there doing 100% of their portfolio on leverage, thinking they're going to be rich tomorrow. I did that 3 or 4 years ago, and I lost $70,000 in one trade, 2 trades in the matter of minutes. I made a very bad trade, lost a significant portion of my portfolio, and then immediately after that, I kamikaze traded the rest of it. I basically lost 90% of my stack, and this was I don't even remember, 2018, somewhere in there, and it made me want to completely quit the game. And why would I? Well, my ego was hurt, and I thought, oh, I'm not supposed to be here because No, let go of all that victim nonsense, okay? Every one of us has been a victim of something. The biggest victim, let me say this real quick. Every one of us has been a victim of a loss in the market, and it's not the market's fault. But the biggest victim all of us can ever be is a victim of ourself, a victim of our ego, a victim of not being prepared, not being diligent enough, and not being disciplined with the strategies that we do have and we're aware of. You're watching this, then you're at least curious about crypto, and you've at least heard something about strategy, and you know buy low and sell high, yet all of us fall victim of getting greedy. That's a victim of ourselves. All of us fall victim of ignoring the rules to set a stop loss or not go leverage on our entire portfolio or being diversified. All of us have been victims of ourselves. So it's a new year. Let's let go of that. Let's not let's not victimize ourselves for the errors that we may have recently made. Let go of that. It's a new day. Right now, hit reset, look at the next trade, the next investment, the next strategy that you want to employ, and ask yourself, what rules should I put in place so I can execute this and be profitable on a consistent basis? That's what we want to do. So we got that out of the way. We flushed our system. We hit the hard reset. We are not going to be a victim. We're going to see that this is an indication a lot of people out there were putting themselves in a position to be victimized. So what does that mean? Well, nothing's really changed currently. This is where we were about 2 hours ago, 10:24, hour and a half ago. And what we do, we had the push up, and we already showed you up here, there was an indication that there was a likely retest to the downside. But know something here. On the retest to the downside, there's a couple different things you have to take into consideration. And we're going to get into the live charts here in a second. A retest to the downside could have been into this zone, which is this previous high, which if you lose this, then you ask, what's my next level that I could be looking at? Well, what we had not done on this breakout is come down and retest this resistance line right here and flip this previous resistance to support to take a long to the upside. Now, some people, and this is not wrong, some people may have had a buy order right on this retest only to have it completely out. Now, if you had a strategy in place, it wasn't necessarily the wrong thing to do. If you had a buy order here and if you got liquidated down here, it was the wrong thing. If the trade got executed and you entered along here on the retest of this, because that's what you're looking for, a retest and then a continuation up, then you should have, and I know we shouldn't should on ourselves. We should never should on ourselves, right? But let's look backwards retroactively. Where was my entry? What was my mistake? If you came down and a trade was entered and then you got liquidated, that means you did not have a stop loss that you put in, that you employed in the trade. Maybe you had a limit order already set. You weren't at the computer. Well, typically when you have a trade that can be executed, you can also have a preset stop loss that is in place for when the trade is executed, especially, for instance, when you're on Blofin. If you come over here on Blofin, it will load. If I want to put a trade in, you see right here on the right-hand side, if you're putting in a trade, you can put in a limit order and have it set at whatever location. And right here, TPSL, you can put in what you want the stop loss or the take profit levels to be on the execution of the trade. So the trade can get executed while you're not at the computer. And on the execution of the trade, it also automatically employs what your risk management is. Now, would you have been stopped out? You absolutely would have, but you wouldn't have lost everything. Now, the other thing I want to say about that is looking at this chart. If you were just buying a bounce here, then it's a fine move. It's an okay move. I'd actually recommend that more for more pro traders. But what I would have preferred to suggest here is if you were going to buy a bounce here, what do we want to do when we see a bounce at an area? We want to see the price action. We want to see the price action do something like this. See how that, let's ignore this part right here. Let's say the price action came down. We want this price action to bounce in the region of that level we're looking at. And then on the move back to the upside, in this case, we see this expansion down. Maybe it's not going to bounce. And then it comes down, it finds support on a trend line. And then it's also within the region of this resistance, previous resistance, say this is coming down to support. And then here, now we see this reversal candle. Now we actually have a bullish candle. Now we have an expansion of the bullish candle. This is a great area right here to take that trade to the upside because we see the reversal happening and we see an expansion of the bullish narrative. So on the close of this candle, on this candle as this is moving up, anywhere in this region would have been a great opportunity to take that on a more consistent, safer basis. And maybe this still reverses, but you have your stop loss in place. In this case, the narrative is already telling you this is likely versus just buying the bounce where this could do this and then continue on to the downside. So where we're at right now suggests, what does it suggest? Well, let's look at it. Well, a couple things here. Look at this very fast move to the downside. Very fast move to the downside, comes down, loses this box level. Remember, this is a previous high range from before. Loses this box level. And then comes back up, retest it. And not only does it retest that, what else is it retesting? Trying to make basically mean reversion back to the weekly VWAP. And here it fails. And so on this case right here, say you didn't get out, maybe you wanted to short, maybe you wanted to exit a long that you had on a shorter term time frame. Then right here, as this comes down, we tend to get a retrace back, right? And on this retrace back, very minimal. And then on the break of these levels, that's your entry. Now, in this case, what does this look like? What does this mean for where price is going? Well, got a couple things to look at. Price action fell and came, look at this, all the way down to the order block that was already there. Order block from all the way back here on, let me move this. Back here on December 29th, we formed this order block here. And I'm looking at the 15-minute chart. It might not be there on the 4 hour. Let's look at the 1 hour, for instance. So either way, even without the order blocks, there may be one, there may not. I haven't looked at this time frame, but we see the price action came down and tested this previous low range. But the buy orders came in very quickly. See this? How do I know that? Because on this candle, high selling volume, it's purple. High selling volume is purple. But within this candle, the candle broke all the way down, and then the buy orders, bulls came in and bought this candle back up before it closed. That's what this candle is telling us. The body is where it opened and closed. Okay? The wick is how far it traveled. The wick is this little line. And we can see within this candle, it opened here, it moved all the way down here, but then closed all the way up here. And then in addition to this, the next two candles, we see large bearish impulse to the downside. It almost was an expansion and bearish impulse because this, with the wick, this is larger, but the bulls ate this back up. So now we're seeing a slowdown of the bearish narrative, even further slowdown because the candle is much smaller, even more slowdown, here. And then we get stopping volume here and the candle's trying to reverse. So the question here is, look at this on the 1 hour time frame. Now, if we come back out, let's just notice this. We have this large triangle formation here. And within this triangle formation, we can see, let me move this over. We can see the candle came down, broke this level, but came right back up inside of it. Next candle, this is a 4 hour time frame. We see the candle, the wick came up now and tested the upper side of this triangle. So we tested the bottom, the support, and the resistance here. So things are a little indeterminable right now if we're looking at it on this time frame. But what do we notice? What do we talk about all the time? We talk about market cycles. Market cycles are everything. And everybody thinks market cycles is what's happening in the next, over on the monthly, the weekly. No, there can be a market cycle on the 1 minute chart. There can be a market cycle on the 4 hour chart. A market cycle is where you have essentially a low. Let me see. You have the price come down, forms a low, consolidation, accumulation, and then a move up, retest of this narrative here, a retest of that narrative here, rise, retrace, continuation, right? Until we ultimately get a distribution top, consolidation, and then a breakdown with a new low, a new lower high, and then a continuation, rise, retrace, fall, retrace, a continuation. This is very ugly because I'm on the, let me go to, that was like a third grader's, attempt at drawing a Picasso. But what we're seeing here, essentially, if we look at this, what are we seeing? We're seeing accumulation, right? We have a low. Finally, we're building some higher lows. And then we break out of this range. We have an M formation. So this is a little mini market cycle here. So what do we expect on a mini market cycle? Well, we expect the same thing on every market cycle. So let's break this down and get a little more clarity. Rise, okay, lower high, and now we break this low, and we have a very fast cascading fall to the downside. So, but what do we expect? We expect a fall, retrace, and we're asking, are we going to get a continuation to the downside? That's what we have to ask ourselves right now. Because as it stands right now, this was a bull trap. Came up, committed bulls going long, and then it reversed on them, stole their liquidity. You donated your liquidity to the game there if you're just going leverage long because we broke this level. Unless you had stop losses and you're just playing the odds. But on this level right now, the interesting thing about this is we're at an interesting point right now with narrative because everybody's expecting the Bitcoin spot ETF. Everybody's frothed up about that it's happening between the 8th and the 10th. In fact, we're going to have James Seyfarth on here next week, I believe. We're going to interview him on a quick guest spot on the Discover Crypto show on Friday. But then next week, I'm going to do a little sit down with him. We're going to talk about all these ETFs. He's the one that's given the most data about the ETFs and everything going on. But the point around that is we're coming up on the halving. We're coming up on the which is in April, likely mid-April. But we also have all these Bitcoin spot ETFs that everybody's expecting to just send the market higher. And nobody wants to sell right now. So the question right now is, do we look at this little mini market cycle as a likelihood of breaking down and going against the grain? Is that going to be max pain? Is that going to upset the most people? Or is it going to be a net, basically a net, an equitable sort of balance between the bulls and the bears because people are no longer willing to sell? I mean, in this case, we saw a lot of buy orders come up and eat up this attempt to the downside. But as it stands right now, we made that attempt, that fall retrace. Is there going to be a continuation? The question is going to be right here at the 41,900 level, which is this rising level of support that's right in here. And what is this level? Is this an important level? Is this an important trend line, I should say? Let's go out to the daily. Let's zoom out. Man, okay, why is this going further? Why is this going further? Oh, wow. Oh, wow. That's interesting. We have all of this coming in through here. And it looks like I should be extending this blue line too, because look at this blue line. Let me go ahead and make this a little, let me minimize this. We have this level, this level, this level. This is a breakdown point. This is the area that was being held at bay. And it doesn't look like I extended this blue line far enough. So let's do that. Let's pull this. Now let's zoom back out. And I just want you to notice something. We got a pretty strong level of confluence with this blue line and this previous resistance line that we have broken out of. And now we've tested 1, 2, 3, 4, 5, 6, 7 times. But the interesting thing about this, notice this, the interesting thing about this is we have these two levels coming into conjunction right here. Look at where they're crossing. Look at where it touched. In addition to this, we have this order block right below us. In addition to this, we have the CME futures gap right below us at 39.5, 39.6. And then below that, we have this consolidation point right here before this breakout, which is essentially 37.8 down to 35,000. So the question we have to ask ourselves is, what do we want to do? What is the price action? What's the narrative on the price action telling us about the likelihood of the next move? Well, in this case right here, we're testing this area. So this is telling me not only is this rising level of now confirmed support for the time being, it doesn't mean it always has to be support. And this level coming into confluence here, this tells me that this level right here, 41,800, this is an important level. If we lose this level, I think it's going to be a fairly quick move down to the CME. Of course, we had the wick here, but if this comes back down and loses this level, I think we're going to test this area right here, 39.5, and then next move is testing this region right here. If we put a box around it, put a box like this, it's because we have all this price chatter right in here. We have an order block right in here, and this is again this 36 to 37.8 sort of region. Now, the reason why I think this level is important if price falls, because I think it's going to be an absolutely epic opportunity zone, and here's why. We not only have this consolidation area previously, we have the CME futures gap. If this does cascade down into this area, it also represents directly where the short-term holder cost basis is, which is at 36,258 currently. Short-term holder cost basis, you can see we tend to tap on. In this case, we lost a little bit, fake some people out. But I think this region, this is that same region we're just looking at with all that consolidation. This region, roughly about 36,000, 36 to 37,000, I think is going to be a very important area and likely will get tested going into the next cycle. Now, if we turn all these other things off and look at this, I just want you to notice something. We're looking, okay, looking just at the short-term holder cost basis, this dotted line. I want you to notice, see, we are below it, bear market, chop around it. This is that consolidation period, accumulation before the breakout. What do? We break out, find support. Push up, retrace down, find support. Push up, come down, find support. We dip just a little bit below it. Very similar to what we did right here. And then ultimately, once that happened, look at this. Push up, we're finding support on this all the way up. Short-term holder cost basis is one of my favorite metrics to look at to really understand where we're at in the trend. Now, of course, again, we lost it, rejection, 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 rejection until we ultimately broke above it. And this is that pre-halving push up, sell off. We didn't get the same thing back here. We had a push up with this a bit smaller sell off. This was that 40% drop. This also was I think a 25 or 30% drop. This right here was a fairly large drop, but this is part of the consolidation accumulation phase. We have not gotten that sell off into pre-halving, but what would that look like? What would that represent on a percentage basis if we're talking about the halving coming up and we haven't gotten a 40% sell-off? Well, let's look at the chart. This is a halving right here. The high went to, let me turn off all of this nonsense. Okay, right here. So 45,881. Okay, let's look at that. And we can draw this 45,881. This would represent down to 36,000. That would only represent a 19% drop. Basically 19, 20%. To get a 40% drop, which we may not get this time, but a 30%, 32% drop would be to the previous range highs. The reason why I point this out, even though I'm so bullish, the reason why I point this out is as bullish as I am, I have downside targets mapped so I can take advantage and I don't get caught off guard if the price does drop. These are reasonable levels, and it wouldn't be some, oh my God, the bull market's over. In fact, I would argue that if we get a 25% drop or a 30% drop, that would account for that previous cycle, 40% drops that we've had previously. The market's larger now. We have institutions on the horizon. We have smart money. We have retail. There are buyers in the market ready for drops to come. So a 30% or even 25% drop for me would satisfy what we've seen historically because the market is larger. The market has changed. And so looking at these levels, a potential 30% drop to this previous range high. Okay, that's going to be my dream buy. It's going to be my dream buy. Okay, this previous range right in here, 20% drop. That means I get the opportunity to get 20% or more of that asset with my capital. I have better buying power against the drop. If the price action comes down here, I'm able to buy more of the asset with the same amount of money. So I'm not worried about a drop because I understand how all this works. And I know that this halving is coming up. And look at this, it's about 93 days. So everything that's happened currently with this price action chopping around, nothing has changed. In fact, we got the bull trap up out of the way, came back down. We flushed some stuff out. It wouldn't surprise me if we chopped in here for the next 2 or 3 days. even longer. I mean, into next week. Everybody's waiting on this spot ETF approval potentiality on the 8th to the 10th. So I expect some volatility around that, especially getting closer. And if it turns out that this report that came out from Matrixport was just, you know, a FUD campaign to bring better prices, and we see that nothing fundamentally has changed, somebody shared an opinion. I think there's a possibility, as many downsides as I just marked out on the chart, I think there's a possibility here. Shout out to the $2 super chat. I didn't even realize you super chatted, maybe Band-Aid. I just thought you sent a message. Big love to you. Thank you for the super chats. I appreciate all the super chats. I appreciate the memberships. Each and every one of you that's a member here. It helps keep us going, helps us get equipment, helps us do giveaways. So big love to each and every one of you that contributes in any way there. I really do appreciate you, and I love you, because this is not a cheap operation to run. I'll tell you that right now. So big love to each and every one of you. Really do appreciate you. So as many downsides as I marked out, I just want to point out, there is a possibility that none of them get hit. I have my plan set that I could take advantage if they do, but the fact that this dropped down with that report, if that report proves that that was just a speculative thing to wash people out and nothing really has changed, and then, you know, the sentiment starts coming back in, there's very well may chop in here and then push up, reject, and then have the lift off. So that's what I'm planning on. I'm planning on the market doing whatever the hell it wants to do, and regardless of the direction, I'm ready for it. If we look at this on a basis with using the BitLab trim fuel, let's zoom out here. Look at this. Stochastics on the 3-day have come all the way down here. They're starting to round. Money flow is still positive. We had a little bit of a bearish divergence right here, where from this point right here, option V, to this point right here, we created a bearish divergence. Oops, a bearish divergence. And look at what this represents on the chart. From back here to up here, we had a bearish divergence. Price action tried to push higher, but the underlying metrics was already telling us that it was a bit overheated, and we got that. We got the trap, and it came back down. So the chart was telling that to us just by looking at the data, not just looking at the price over here on the right. Oh my God, it's high, it's low. The price is irrelevant to what's going on in the market. You want to look at the price in relationship to the data that is behind that price. So get down to the 6 hour. Okay, we're at that critical juncture. Go ahead, look at this, 42.8. We have another $1,000 to go down before it really gets scary and break below this low. If we break below this low, I think we're absolutely going to clear this CME futures gap. If we come down here, bounce, I'm watching for a little bit of chop, a little skepticism, because we did just get a flush out, and pay attention to what's going to happen to get our orders filled. That's what I'm thinking. That's what I'm feeling. Dave Middleton, what's up, all? Hey, let's do this. We got 207 people in the room. Let's do a roll call right now. Roll call. Who's still here? Let me know. Is it your first time? Have you been watching are you OG? Because we are coming up on a year at the end of this month. We're almost at 10,000 followers. And I won't even call anybody on here followers, because none of you are. 10,000 community members. Let's see if you can be here. One of the people that was in the first 10,000. So if you haven't yet, look down, hit that subscribe button. Exploring Adventures says first time. Well, welcome to the community. And I do want to shout out really quick on the Discord, the BitLab Discord. There's been such great stuff we're adding so much more, by the way. Again, I suggested the breakdown yesterday at 2 o'clock, 2 Eastern time, that this was setting up rounding and the head and shoulders likely breakdown. But we also have, by the way, in the open area, the free area, if you go into the Discord, the link is down below in the description. There's a news roundup here that we update with a lot of the news that we're looking at. If you just want an easy spot to find the important news that we're looking at, and we draw a lot of it for the Discover Crypto Show and also here in BitLab. But coming down here into the members chat, we got a great community here sharing a lot of stuff of what's going on, things you should be looking at. It's all curated for you, baby. VIP charts, calling out coins you may have never heard of, setups that are there, you know, what's going on, what to look for. Chart requests, if you want somebody to break down, whether it's me or Tim or John Dalton. John Dalton is an absolute OG in here, a professional trader. I'm talking legend. A lot of great stuff going on in here. Gym calls. Jim Chat, Jim Calls, Stock Trades, TA Tim. If you come down here in the BitLab member zone, if you're a BitLab member at bitlabacademy.com, he did a whole breakdown. He's going to be doing a lot more breakdowns in the morning about what he's seeing on TA, so you can be set in the day. And we're going to be doing a lot of community gatherings in here. So get involved if you haven't yet. That's over at bitlabacademy.com. And you see, we got all the courses, and the true value is in that premium Discord, which you get access to when you enroll right here. Join the All Access or the All Access or the BitLab Pro, which gives you access to all of the indicators as well as the Discord and the courses. But that's all I got, guys. I love you. Remember, we got key levels below us. Any price to the downside from here is setting up different opportunities. I showed you the levels, how to find those levels of where you can ladder your entries if the price does fall. I'm setting up positions for this next bull run. So any downside from here, I am cheering for, because it means I'm getting the best positions possible and averaging those entries to be prepared for this next bull market. So with that being said, everybody, let's see. Got Spaceman V. He's lurking. Shout out. Quarter Crawler. Big love to him. He actually gave away his giveaway that he won. So maybe tomorrow we will give away that giveaway that he is giving away. There's a lot of giveaways, right? So it's a 1 month access to the BitLab Pro. So I'll figure out something tomorrow that we can do to give that away and choose the winner there. Hefty pullback. B Team Crypto's in the house. Fade and Trap 5. Let's get a little roll call here with emojis. If you're a member, drop some emojis. Say what's up. And hey, tomorrow we're going to have TA Tim here live on the show. Friday we have Army Piper. We're going to be doing some guest spots on here, Sharon, and big love to each and every one of you. I see buy the dip emoji there in there. Everybody, I want you to drop your comment, not in the live chat. Drop your comment below this video as soon as we're done. Where do you think price action is going to be on Sunday at the end of this week? Let me know. I love you guys. Make sure before you go, hit that like button, subscribe, and join us here in this community, because we are, I think, the most empowering, positive, not only crypto community, but we talk life, we talk stress, we talk family, and we break it all down also through the lens of crypto and how we can be better people so we can contribute to this world, to our family, to our portfolios, to all of it as a holistic manner. I love you guys. That's all I got. Adios, muchachos. Adios, muchachos. Thank you for coming. Thank you for always tuning in. You better check out bitlabacademy.com. Join our community. Get in there. Premium Discord, trades, setups, community, live streams, everything. Go enroll. bitlabacademy.com. Hit that like button, sucker.